At the beginning of my trading journey, I spent hours and money on books trying to understand candlesticks. After reading all the patterns that they tell you to memorize, I'll feel confident, I'll take trades, only to watch it fail. In this video, I'll be showing you the simplest way to read and use candlesticks, execute your trades with confidence, and increase your win rate. So why do you need to understand candlesticks? You need to understand how the market moves. It's not enough to know where to enter trades. You need to know how to manage trades and also know where to exit your trades. And understanding candlesticks, how they form, what's going on in the market while you're in a trade, and when to just exit the trade is very important. Candlesticks tell you the story, and you need to be able to listen and be in tune with what the candles are telling you what's printing at that time. And it'll help you avoid unnecessary losses because, oh, you're maybe memorizing different candlestick patterns, bearish harami, bullish engulfing. I know that feeling. And then you just take it whenever you see it, but you don't know the context, when to look for it, and it can be very frustrating. Once you understand how candlesticks are formed, where to look for them, and you're able to interpret what's going on, you'd have confidence in the trades you take as well. So, what are the three types of candlesticks? Number one, I'm going to be discussing are the strength candles. Be going over the second type, which is indecision. I like to call it confusion because there's no clear picture, story of what's going on when those candles form. And number three, control. I like to call it control flip. So I'm going to go over each of them individually and explain when to use them, the context, and I'll go over examples as well. So number one is the strength candles. The market is an auction. That's the one thing that I failed to understand when I started trading. I didn't really grasp that concept of it. It's an auction. When you have more buying or demand, price will continue to increase. When people want something and there's demand in something, you see price will start to increase. Example, when your favorite artist has a concert and tickets sell out. When you want to get those tickets from third-party buyers, because they know you're desperate, or they know that you want that thing, it's in demand, they can pick any price they want and it just keeps going, you know. And same thing for sellers. If people feel like something is overvalued or they don't really want it, price will start to decrease. Now, these strength candles just show you that one side, either the buyers or the sellers, dominated and won the battle during that period. So for bullish strength candles, you would see that price open up lower here and push higher. As a result of strong buying, buyers were in full control of price. And the opposite is true where you have sellers open up price here and it pushes down and it closes lower. The candle will be red, and in that case, sellers took control in that session. Now, let's not forget something. Bullish candles with no upper wick are stronger. What does that mean? There's no upper wick right here, and you have a big body. You have a big body that formed, and this is a wick. Candles that don't have this upper wick show that sellers did not even show up. That's strength. They're way stronger. And for bearish candles that don't have a lower wick, it means that buyers did not try at all to stop this selling. They are stronger than the ones that have a wick at the top and a wick at the bottom. Now, another thing you need to remember for strength candles is that size matters. The strongest candles are the ones with the bigger bodies. They have larger bodies. So on my screen here, I've ranked it from strongest to the weakest candles based on their size. One thing I want to mention is that the engulfing candle that a lot of people, I fell victim of this at the beginning of my journey. Oh God. I blame myself. Yes. Bullish engulfing, bullish pattern. Once you see it, buy. Yes. And that's how you take unnecessary losses. But it depends on context, depends on what's happening. So when you're looking for a pullback, say you have a trend going higher and price starts to pull back into an area of interest or support, this is where you want to look for strength candles such as this. And when you have a green strength candle that covers 1, 2, 3, or covers the previous 2 candles, or 3, depending on how the action forms as support. You see a strength candle that engulfs price. That shows that buyers are stepping up, and that level, yes, is indeed important and it's being respected. So that's how to interpret the bullish engulfing candle. It's one of the most popular strength candle patterns. Now, control flip candle type number 2. In this case, one side was dominating. In this example here, buyers were dominating, but at some point, sellers came and said, nope, they took control and they pushed price and they closed lower. That shows that the side that was winning the battle started to get weaker. And then there's a flip. That gives you a hint that something is happening. So you need to be careful. If you're in a trade, you start watching, you're careful to see, okay, what's happening here. All right. The bearish scenario, I just went over that. Price, and I use gray because these candles form as either green or red. It depends on how it closes. If it closes higher than the open, it will be green. If it still closes lower than the opening print of that candle, it will be a red candle. The bullish scenario, same thing. If it closes higher, if it closes here, it will be green. Those ones are really strong. And then if it closes lower, if it opens right here at the top and closes down here, it will be red. It's still a flip because the sellers did not close this price close to the lows. Now, the most popular type of control flip candles are pin bars in the bullish scenario. As you can see here, you have the red version and you have the green version. Now, how do you use these type of candles? Again, you would have an area of interest, key level that you're watching, right? This is a bullish scenario. We'll see bearish scenarios in examples. So you have a key area of interest you're watching. Price comes lower and you see an action like, okay, sellers, strength candle, okay, coming into support. You start to see this, and then all of a sudden you see that buyers are stepping up and you're holding it. In this case, that key level is being respected. Watch out if you're going to take a trade. That gives you more conviction of pin bar. All right, you just don't take it anywhere you see it. Doesn't mean that, I know as I'm talking about this, I'm just remembering all the mistakes I used to make. But now, the next one, the final one I was going to talk type of candlestick type number 3, indecision, confusion. In this one, you just want to wait. It's telling you, wait. Price opens, we push higher, we push lower, and the end, it closes near the opening print. That's it. Indecision examples. It could have more of a body, smaller body, and then some of them will have no body. These are called dojis, right? You have a bunch of dojis that form. So now, in a chart, say you're in an uptrend, and then you see a pullback happening. You see a doji form here, one, you see another doji form here, and it's approaching your key level. At this point, it doesn't mean, yeah, price is holding above, enter the trade. No. You watch again for 2 things. Do you see control flip happening, or do you see strength before you buy? Now I'm going to go over examples in the charts and show you how I use them to take trades and manage trades. So coming into the day in this example, you see that we are below the previous day's low. And usually with my strategy, I like to take shorts when we are below the previous day's low. We're looking for price to trade into the previous day's low, and then we see rejections like this, and then boom. And we're going to try and look at the candles just to see what plays out, and I'll break down what's happening and how you could have taken this trade that you're seeing right here towards the downside. So you see that as price comes down here, you see that buyers start to come in really strong. You're seeing these strength candles. Look at it. Green, green, green. And then as price approaches the previous day's low, you start to see weak price action. Then you see strength again, and then some sellers coming in, and then we still get a final push into this area. But what happens? You see a hammer candle at resistance. When you see a hammer candle or a pin bar at resistance, that's a sign that like a pullback would happen or a reversal will occur. A pullback will mostly happen if we cannot get above that candle's high and see full closures and continuation above that candle's high. Now, what happens? You see that we see a low pullback, but price holds this previous red candle, this down candle. Okay, structure is still holding. This is a what? Higher low. We try to advance, no way. We continue fighting around these key levels. We see strength candles into resistance, but we still cannot get that close. Even when we have this close here, we don't see continuation. That's a sign that sellers are present. They're not allowing price to advance higher. We continue to see this happen. Eventually, we get the kill candle that we are looking for. Right? We see this rejection candle at resistance, right? A wick showing that sellers slammed this price down. And now you see what prints next. Another pin bar hammer at resistance, where price has been rejecting and we're not advancing above. That's another sign that there's weakness here. Now, what do you want to see? Failures, because based on price action, you're not just going to enter this trade because it technically hasn't broken structure, because this higher low is still respected, right? So now once we get this failure below this higher low, and you're seeing strong selling candles, and then we see another rejection candle here to show. Let me put the support so that you can see what we're looking for, right? We see that we've broken that higher low, trend has flipped. Now we see a rejection candle, and then we can literally enter this trade. We can literally enter this trade here and look for price to trade down to low of day, and you have more than a 1:2 risk to reward. So even when you play this out nicely to see what happens, you see that you almost hit your target, but you're gonna stay in the trade and just wait. You have to be patient. You haven't stopped out yet, and eventually you see that you hit your target and even more. It took a while, and you had to probably sit through this trade, but it ended up hitting your target. And as you can see, when we hit this level, you can see how buyers stepped in here. But it doesn't necessarily mean that, oh, a reversal is going to happen, right? You need to see strong price action and confirmation to see that maybe price might reverse off pre-market lows. So that's just an example of how you can look at candlesticks and break it down using price action. Of course, your thesis coming into the day. In this case, I used a combination of things: previous day's low, break and retest, price action, candlestick analogy, like watching to see what the candles were telling me, and price action to also be respected. And then you take the trade and you just have to wait it out. Some people would have stopped out and gotten impatient that, oh no, this trade is reversing on me, and get out of the trade. But look at it, it played out nicely towards the downside. In this example, I'm not going to do the replay feature. I'm just going to like walk you through this. So as you can see, again, we opened below the previous day's low. Sentiment is bearish. You see that straight up, you just see sellers strength. You see a candle here that forms that, okay, maybe buyers might step in. Nope, because we're not able to get another follow-up candle that closes above or even tries to advance this move. Nope, no way. There's more sellers. And you can see, if you mark out your 5-minute candle low right here, if you mark out your 5-minute candle low right here, you can then watch to see if price breaks below it and then retests, which it did later on, but I would go over the price action so you can understand. You see that, yes, we get a push. Buyers try to deceive us that they're going to step up, but You can see doji forms indecision. Then you see a hammer as support. Then eventually we have a strong sell candle that engulfs this 1, 2, 3 candles. Sellers are present. We sell, break down, break below the 5-minute opening, 5-minute range low, sell, then come back into that level for a retest. Now that you're watching this area of interest, you can see that we see a strong sell candle that engulfed this green candle. Sellers are present. Okay, do we see a follow through so that we can enter this trade? Not really. We see that doji that forms indecision. We see another green candle that doesn't really engulf this red candle. It's not that much strength. Next thing we see is a strong engulfing candle that then engulfs this past 2 green candles. That shows that yes, we can now enter this trade once the candle closes below, right? In this instance, you're now looking for a trade to the downside, and your stop loss is going to be right here, and you're looking for a 1 is to 2. Easy peasy, and you get it, and even more towards the downside. So that's an example. I've shown you downside examples. Upside, you can do the same thing. Right now, I'm using sell examples because the market is currently selling, and I want to use examples that are relevant and you're seeing in today's price action. So let me know if you have any questions, you need me to clarify anything, but you need to understand and read the price action as it approaches the level, when it's at your level, and as it approaches your target so that you can take profit accordingly. Here, as you can see where your profit target is, as it closes and you're seeing some consolidation and indecision happen, this is your sign to get out of the trade because you could see a potential reversal and it could go back into your entry, and that's what it ended up doing. But if you stayed in the trade, maybe, yeah, you would have gotten stopped out eventually. But I hope this makes sense. I hope you understand what I was trying to convey to you. If you have any questions, put them in the comment section. I'll be happy to answer them. Thank you so much for watching. I'll see you on the next one.